is Monday. Anything that's trading on Monday is going to settle in the month of September at this point anyway. And then on Tuesday, we will have September 1st and the first trading day of the month. If we simply make a higher close on Monday above, I mean, as long as we don't sell off like 200 points down to where we closed July, we're going to have another new monthly all-time closing high. In July, we had a monthly all-time closing high, and what did we get out of that? We got a gap up, open, and go, followed by several gaps throughout the month of August. So as long as Monday doesn't sell off 200 points and then break down below where we close the month of July, we're going to have a new monthly all-time closing high on Monday, and that alone could give us another set of reasons to rally for a few more days as we head into the new month. When we came in on Friday, here's the intraday chart. Here was here is basically all of Friday here. Here was our initial balance period. We came in and we needed to break down through to at least at 34.78 in the first hour and then break down below 34.68. We couldn't even get below 34.84. I gave up. I got rid of all of my Monday puts when this held down here and just gave up on that. And then shortly, a few minutes thereafter, after we got this second little dip back down, I got rid of my September 4th puts as well. And I will pick puts up again, maybe as we rally on during the course of the week. But for now, I just knew that resistance was futile. It's holding the 80 handle rule, the 34.80s. I knew that it was going back up to 3,500, so I just gave up. And sure enough, towards the end of the day, we broke out to a new all-time high and rallied up to 35.09 and closed at 35.08.01. But we still have not resolved the all-time high that we made overnight Thursday night coming into Friday that was made during Trump's speech. So we have that to resolve. That's going to take us up to about S&P 35.1250. And above that, we have our next target from our list up at 35.22. I'll go over that a little bit further into the video. Here's our weekly chart. We made our weekly all-time closing high, our new fresh one that we, after making a new weekly all-time closing high last week. But right now we are so extended above all the simple moving averages on a weekly time frame, including, this highest one that we watch, which is the 10-week simple moving average. This is the same amount of days as a 50-day simple moving average, but the level is a little different because obviously weekly moving averages are judged on the weekly closes. So our 50-day simple moving average is a little bit different of a level than this, but it's still about the same time frame. And look at how extended we are above this. We are almost 7% extended above where the 10-week simple moving average is. The last time we were this extended was back here in 2018 in January. This was only 2.5% extended above it. This was also during one of Trump's speeches, so I thought that's kind of interesting. Maybe if it does turn out that we have put in our all-time high last week and we roll over from here, it will symbolically be the same kind of event and the same sort of set of circumstances where we are extended above the 10-week simple moving average. But anyways, like I was saying, we are at this point, we are 7% above it. I rolled back this chart. This chart goes back 20 years, and there is not one single event that I can see. Of course, it only goes back to August of 2000. So I can't see where earlier in the year 2000 and in 1999, where we might have been further extended above this. So it could just be that my chart doesn't go back far enough. But in the 20 years that I have on this chart, I've not seen an extension like this. So that's something, food for thought. But what's coming up this week? We have the non-farm payrolls coming up on Friday. I was hearing some talking heads that I was surprised to hear talking about this on CNBC on Friday, talking about getting to 3,600 this week. So I can only go on to say that, A, it's because the Dow has finally gone positive for 2020 and closed positive for the first time since the sell-off and the rollover back in Q1. So the Dow is finally caught up to where the S&P was all the way back in the spring and where the NASDAQ was all the way back in, within a month after we turned the market off of the lows. So the Dow is finally caught up. So if the Dow's got a little bit further run, the rest of the market's going to follow along with it as a companion. Sorry for my grandfather clock going off in the background. Anyway, our 20-day simple moving average is going to move up here close to 3,400 by Monday, and it will be up over 3,400 as the week goes on. And our 10-day simple moving average pushes up well into, even it's already into the range that we traded last week. It's going to push up even further. I would say as the week goes on, this will push above 3,500. Maybe that's going to be a piece of criteria that goes into the algos when the 10-day simple moving average crosses 3,500. Maybe that's when it's going to signal take profits, and some of these algorithmic programs will start pulling the plug, and we'll see a rollover then. So that's something to watch out for. It'll be 3,440 by Monday, and it's moving, maybe it depends on how this all shakes out when you add this all up. But right now it's moving like 12, 13 points a day. So it can get to 3,500 as we get further into the week. But obviously when we do pull back, we're going to be looking for the 10-day, and then we're going to be looking for the 20-day, and whatever is in its wake, be it, gaps or whatever. At this point, the only gap it's going to fill is this gap between August week 3 and August week 4. And finally, looking at our levels list. We closed at our new all-time closing high, 35.08. Our next high would be to resolve the equivalent of the ES overnight high, all-time high. I have the feeling that if this 3,600 thing is on the radar, we're just going to blow through this Sunday night, and we're going to gap up open well above this 35.12. And that's going to be sort of our line in the sand going forward. This high that was made on ES while Trump was giving that speech, that's going to be the line in the sand. And the market's going to completely, it's going to rally up, it's going to come back down, and if it doesn't hold this 35.12.50 ES, S&P 35.0975 ES, then it's going to roll over and it's going to really fall down from there. And we know that the 10-day is working its way towards 3,500 as the week goes on, so you can see how the plot thickens. Above here, our next target was we go into some simple, percentages. Plus 9% on the year would take us to 35.22. Plus 10% on the year would take us to 35.54. What's interesting when we get to a 5 or a 10% level on anything, be it a stock, an index, or whatever, or it being a rally up or a correction lower, we almost always overshoot 5 or 10%. Either we stop short of it, so that's why I kind of pointed out where we are if we get to 9%, or because there's so many stops that are set there at that 10% level, be it if it's coming down, on a sell-off or rallying up. There's so many stops that are set at that big round level that it automatically overshoots it. So to overshoot 10%, we go on up here, all the way up here at the top of the list. Plus 11% on the year would be 35.86. Plus 12% on the year would get us to 36.18. So this is what I think that these people that I listened to on Friday, that I watched on CNBC, come on and talk about, that 3,600 was happening this week. I can only imagine that what their bet is that we are overshooting the 10% level, and it's going to happen next week because we're leading into the non-farm payrolls report, and people are going to really pull the plug and take money off of the table starting Thursday afternoon, going into that non-farm payrolls report. Or it'll be a situation where we rally up and hold, but maybe we sell off on Friday on that non-farm payrolls report, so we end up with a gap down open. Or we have a good report and it pushes all the way up here to look above 3,600, but it's just too much, and it's sort of a sell the news event, and we fall down off of that. But in any case, we've got both an event catalyst and we have a percentage point catalyst that could get us up here to 3,600, and that's that overshoot of the 10% level. Plus, also look at where 10% is. It's at that 35.54 level. Every time we get to around 51 to 53 ending handle on the S&P 500, we either get completely stuck below it and work to try and get through it, or we just blast right through it because there are so many stops set there just because of that handle alone. Maybe a lot of people naturally gravitate towards shorting a a 50 handle call option or something. Maybe that's why it happens. But in any case, it's both a level that we know always is trouble for us or a huge breakout point for us, and it's a big percentage level for us as well. Okay, that's it. I don't want to drone on and on too much longer. I hope this video helped you out and gave you some idea of where we are at. If I've confused you, please send me a direct message this weekend, and I will definitely get back to you before the Monday open. Have a great rest of your weekend. As always, good luck and good trading.